You're looking at a chart of the Aussie versus the yen, and what I see here on this daily chart is this double bottom that I want to capitalize. Now, right now we're too close to that, so there's really no opportunity at this point in time. And so what I want to see, if I do want to capitalize on this opportunity, I want to have some level of pullback, okay? And I want to come back up into that previous day low, okay? So this is for your study to monitor this chart and see if we can get a movement. We can forecast a price action that meets our prognosis. So that's kind of the high level what I want to see on this price action, with the basis that I believe this is the next draw on liquidity. Okay, so that's the lesson. Where has the market come from and where is the market going? I also noticed there are some equal highs, okay, that we need to be aware of. But given that we've had this down candle, the market has come from this high, taking out those highs with this day, okay, and has gone down on this day, taking out these lows. And then, as I've been teaching on this channel, every time the market takes out liquidity, it seeks the same on the opposing end. So it's tried to go back up into this high, but has failed to take out that high. It's come into that wick, okay? And from looking at what we see here, it's come probably into the midpoint, okay? And then on this day, the market has taken out this high. So it's taken out liquidity, and now it's seeking the same on the opposing end, which is down here, okay? And it's done that with this big down candle. So the market is now seeking the same on the opposing end, and that doesn't have to be liquidity every single time. It can be inefficiency, and I would expect there to be inefficiency on this move down, okay, that perhaps the market had reached for with this candle up, right? But the trend on this chart with this move down, taking out these lows, has shifted, okay, and maybe not to a great extent, and so we may not be fully bearish at this point in time, but at least we can form an opinion that we are not bullish, and so we're looking for bearish opportunities, and one of those is currently open on our chart with those two relatively equal lows there, okay? And so when you do have a down candle such as this one, then you do want to see a level of pullback, and typically that will come to the previous day low, okay? And then one would expect continuations. Now, I have mentioned that we need to be careful of these equal highs as well, so it really depends on how price behaves when we get up to this level, which I think is around 103.70, okay? We can jump to a weekly chart to see if we can get any further clues on where this pullback up may come into, okay? And we do have this wick that we can see from, that's basically previous week low. So that's now been taken from last week's move down. So we've taken liquidity there. Now notice we also have relative equal lows here, okay? Which is, let's have a look, what is that level? I'm gonna draw a line there. So that's gonna be our draw on liquidity. Okay, that's 102.60. Okay, that's the draw on liquidity. Now, I think I moved back up to previous week's low, which is 103.60. Is okay. 103.36 is the low of last week, and our target is 102.63. So that's, you know, that's only 30 pips or so. It's okay, but I think what we can do is aim for a pullback that makes more sense from a risk to reward perspective. So if we take that wick from the last week, that then I've got my cursor on, just put a midpoint on there, that comes at 103.70. That's where I would like to see a pullback come into, and then assess what is price to at that point. Okay, and we want to see weakness at that point for a forecast to back to the downside at 102.60. And if we measure that now from in terms of how many pips we have, that is at least 100 pips. Okay. So that kind of makes sense based on what we might be risking once we assess the trade at the point in time, once we get to that level. So we've looked at the weeklies, we formed a bearish bias, okay? We've looked at the dailies, we formed a bearish buy, so better than what we were originally thinking, okay? We were thinking perhaps just at these lows, but these weekly lows are obviously better for us and very clean as well. And that would also mean that the market comes into this gap and kind of rebalances the gap, and the market's not going to just stop on the dot there. It's going to go through those equal lows, and that makes sense because then that means it could balance this entire gap, okay? And so our target would be there, but it doesn't have to completely balance the gap. So my target, the way that I trade, is I simply put the target right on where the double equal low is, and I'm not worried about getting this little piece here because there's no guarantee whether it goes into that gap there or completely fills it, okay? And so it's safer to just exit at the level that we can see, right? I like to take profit at a level that I can see us getting to, rather than trying to guess how deep we're going to go into this gap to balance this. Sure, one day we'll balance this completely, but there's no guarantee when that's going to happen. Okay, so our target's going to be 102.60 for your study, right? So you want to study this chart and monitor and see, do we move back up to where we think the market's going to get up to? Okay, and we could further refine this and see what was the closing price of Friday, and perhaps see, where does the closing price on Friday come in relation to this line that we've drawn? And I think that is close. It's going to be around that 103.70. Okay, we can actually see it there. It is there. It's right on 103. It's right on that closing price. So it's a good level that we've calculated. We can see that previous candle there, and it's our line that we've drawn, which is where our expectation is on a pullback, is actually right on the Thursday's closing price. And we've taken that line from the weekly chart. Okay, so it's just amazing how all these things line up. Okay, so we can jump down to perhaps a 4 hourly and just have a look at what's the 4 hourly showing us. Okay, we can see that the 4 hourly showing us, this is kind of where the selling started. Okay, and liquidity resides above this level. Okay, so what we're looking at as an entry, or expecting price to pull up into, is close to that level, those highs where liquidity rests above, and then we are anticipating price to then reverse back down to 102.61. Okay, 102.60 is probably the closest even number there. So that is now for your study. I want you to monitor this chart. We can drop down to an hourly and have a look at what the hourlies are looking like. I mean, I don't do all of this, but they do look reasonably well. This level down here is pretty clean. Okay, so we're just looking for confirmations on our prognosis of what we think is going to happen. As I said, we do need to be careful of all these equal highs. Okay, so the market could be reaching for that into this gap, okay, that we still have open, and then come down. So we just got to be careful and monitor. So the idea is to really monitor price when we get back up to our zone and see what price does. Okay, we want to see weakness. We want to see indications of price rejecting this zone up here. Okay, so this is now for your study. Okay, monitor the charts and see what pans out. Are we going to move up here? What does price do when we move up there? Is price going to go straight through? So they're things you want to look at. If we do see weakness in our zone, what time is that? What session is that? What day is that? If it's today, if it's tomorrow, if it's Wednesday, and then do we see the market then turn around? And where do we get to? This is the first line is our target. That's the relative equal lows from the weekly chart. That's this line here, 102.60. Okay, and as I said, if we measure that from our potential trade entry in the demo account for study, that would be down to that would be approximately 100 pips, okay, on Aussie yen. So I hope this video was insightful. You're only going to learn if you watch these moves pan out live as I've explained them. Okay, monitor the charts live. You can obviously monitor the charts after the fact as well, but it is going to be better for your learning experience to monitor these live. Okay, I will now talk with you in a future video.